get us going live on Facebook. And all right, perfect. So guys, thank you so much for joining me today. I am super honored to have a special guest to present to you on this super important topic, because we all might not have realized it, but the moment that you went into business for yourself, you actually are not a sole proprietor. You are a partner, and you have a partner in Uncle Sam. You do not have a choice. Your partner gets their cut no matter what. And Chris's role really is he's a tax preparer. He's a tax strategist. He's an amazing man. And he really helps you to try and cut out that silent partner and minimize as much money as you're paying to them and decrease how much you're paying to that silent partner. So Chris, I am honored to have you on board to help present to this fine group of people. Guys, if you have questions about anything, feel free to post it into chat. Rarely do I ever present where I'm not actually the presenter. So I get the chance to monitor chat. So if you are on Facebook or if you are on Zoom, feel free to post questions. I will monitor those questions, and we'll have time for Q&A, a good amount of time for Q&A at the end. So Chris will cover that, and I'm gonna go ahead and turn it over to you. So Chris, take it away, my friend.
Awesome. Well, thank you. I'm sharing my screen, and yeah, I am. You say you're honored. I'm honored because, like John said, rarely is he not the one presenting. You're one of those larger than life people, John. Both.
You call me fat?
No, stature
Okay.
and personality. So no,
Okay.
I just appreciate the opportunity. So I am Chris Middleton, Chief Tax Strategist of both Bridges Tax Strategies, my consulting firm and tax preparation firm. And then I'm launching this nifty little thing called Tax Reduction University, which I haven't told John a ton about, but it's an online training or resource for business owners, because like John said, your partner in business, whether you like it or not, is Uncle Sam. So this is I've actually pulled these slides from my masterclass that I give monthly. And my goal is, I tell people, I say, my goal is to help you change the way you view taxes forever. So it's just some housekeeping items. This information is educational and general in nature. It's not meant to be specific tax advice. Tax advice is when we sit down, talk about your specific details, and you're usually writing me a check for my time. So that is not this. We're giving general information. This information is material is copyrighted, and recording and distribution outside of what I've given John permission to do is prohibited. So at the end of the day, I operated in the philosophy that taxes are excessive. You as a business owner, you probably feel this in your bones. You pay too much in taxes. And my goal is to help you change the way you view taxes forever. So, as a tax practitioner doing taxes for almost 15 years, I have clients that come to me and say, hey, Chris, I need help. I'm paying too much in taxes. And what I found is what I was giving, and what a lot of really competent tax professionals do, is they give tax tips and tricks. They say, hey, if you do this, then you'll save money in taxes. Or if you do that, X, Y, or Z. So what happens is people walk away from the tax practitioner and take a bunch of notes and say, okay, perfect. Come back the next year. And in reality, what did they do? Probably nothing, because we're busy running our business, our lives, family, vacation when we can get it, trying to just keep up. And so what I realized is people didn't need tax tips and tricks. They needed tax strategies. Well, that means they need some education. So there's an educational component that's needed. The other thing is, once hey, you've taken the time to get some education, well, that's great, but what is optimal for me? Should I go this way or that way? So it takes time to evaluate. And so what I've determined is, in my 15 years of experience, that once you've had the education moments happen, there's some evaluation that needs to take place. So there's tools that are needed for that. And then the biggest thing is, as I've been sitting here on this side of the desk for my clients for 15 years, is giving advice. There's a lack of follow through. And so really there was a lack of a system to implement. And so that led me to believe that, hey, there's execution. That execution piece is missing. So that's what Tax Reduction University, I had that light bulb moment, and I said, hey, the system that we need is exactly this. We need education, tools to evaluate, and then tools to execute. And so that's where a lot of really competent, really good tax professionals just don't do those things. So Tax Reduction University was founded with that intent to help small business owners change the way that they view taxes. And in 2020, my average, I'm a numbers guy, so my average tax savings per client was $23,482 per client. Pretty good. Now that is an average. Some clients were higher, some were lower, but that's my rolling average. So I'm pretty proud of that, and pretty proud of the fact that I've been able to help people in that way. So I always challenge people, invest in yourself and let's learn something. So I'm going to give you that education. So I want you to pull out your notepads, pens, papers, notepads, digital device, whatever you do, as long as you can be focused and not distracted. And let's talk about something. So the strategy that I love to kind of share is optimizing your home. Now, this definitely applies to realtors, and I should preface and say I work with a lot of realtors. So optimizing your home. And there's this little strategy or this little thing called the Augusta rule. Now I'm going to tell you about this, and some of you may have heard this by throwing it out in the chat. Anybody heard of the 14-day rental or the Augusta rule? Anybody out there know about this one before I launch into it? Okay, I heard John. Oh, me. Yeah, of course. We talked. Hey, you pay attention to me when I talk.
I do.
So my girlfriend, I told her about this, and she threw out there and said, "Oh, I saw that on TikTok," and I was like, "Cool. So what can you tell me?" And she didn't. She's like, she's super smart, but she's like, "Yeah, I can't tell you much other than I heard about this." And I said, "That's great."
She is dating you though, right?
Yeah. So she's
So
like, "Well,
super smart is not really, we're not positive yet. Jury's out. I'm sorry, Chris, go ahead.
I'm reasonably funny, so maybe
Okay.
let's
All
keep it
right.
around." So yeah, and the dimples, I guess. I don't know. But at the end of the day, she said, "Oh, I know about this." I said, "Perfect. So tell me about it." And she's like, "I just know about it." And I said, "Hey, that's great. Again, this is the education where you learn something and you're like, oh, cool. But then how can you evaluate it and do something with it?" So what I'm going to do is we're going to go a little bit deeper than the TikTok, like, hey, throw something out there, that 60-second blurb. I'm going to give you this. So the nickname for this is called the Augusta rule. I call this the $12,000 write-off or deduction your CPA doesn't know about. So the IRS, or what I call the Infernal Revenue Service, the IRS code is section 280A little g. So if the geeks in the room want to look it up, it outlines in section 280A little g the rule that you can rent your home. You can rent your home out on the open market as long as it's 14 days or less. You can rent your home out and you don't have to claim rental income. Kind of cool. So clients are like, "I'm not going to Airbnb my house. That's stupid. I can't get enough for my house to make it worthwhile." And I said, "I'm not saying you should." The loophole, I don't like that word loophole. It sounds like you're doing something shady. We're not. This is completely legitimate. But the loophole is that your business can rent your home from you for what I call event specific things. Now, there has to be a business agenda or a business purpose. I'm going to talk about that here in a moment. But let me ask the room, anybody in the audience set goals for their business? Yes, I do. Okay, I see a yep. John, do you set goals for your business? I hear a yes. Okay, perfect. So where do you set those goals? If you're a business owner, specifically a realtor, probably in the comfort of your own home, especially in 2020 with COVID, right? But a lot of people to spend that time and they kind of have a goal setting workshop in their home. So how long does it take? How long does it take you to rate? Anybody set their goals in 5 to 6 hours? Use kind of that time frame. No, I see Kathleen shaking her head. No. Do you mind popping? How long does it take you to set your goals? If you don't mind me throwing it out there.
Gosh, it could take me a couple of weeks just to get it all narrowed down and figured out.
Phenomenal. That is amazing. That you're one of the first people that said a couple of weeks. That is fantastic, because what that means is thank you for sharing and being vulnerable there. What that means is you're taking your goals and you're saying, here's what I want to accomplish, maybe on a 5-year plan, a 3-year, a 2-year, a 1 year. So now you know where you want to be, and you can say probably by year, quarter, month, week, and maybe even day, what you need to be doing in your business to achieve your goals. Am I seeing the head nod? That's amazing. So that is exactly this. So I personally, I spent, I start my annual goal planning in October, and I spend, so I'm starting into the third quarter, fourth quarter, I can count, I swear, it is tax season. Fourth quarter, I start into the fourth quarter reviewing my goals. Where am I at? Where am I not on track? Where do I need to be on track? But I start building out my annual plan, and how does that fit into my big master plan, right? In October. And I spend a couple days doing exactly that, drilling down. So again, I'm promise there's a tax reason we're talking about this, because you're doing that in probably your home. Now, what you're missing if you're doing this type of planning, for example, in your home, is you're probably missing the write-off of the value of your home. So what I mean by that is what you would go out and rent a space to sit down and do this in. So this is what we mean by an event specific thing. So what meetings can you hold in your home? We just talked about goal planning, right? If you do an annual goal planning of one day and then a quarterly, right? You've got 5 days right there that you have, that you can say, hey, I'm gonna hold these meetings in my home. There might be a business strategy, maybe a mastermind, a quarterly mastermind. I had a client who had a mompreneur group, right? She had a bunch of moms that were business owners, and they found babysitters, and they maybe got together and once a quarter and talked about the struggles of running a business and being a full-time mother or parent, right? So you can come up with meetings or things that are business related. And then you have to have a business purpose. So you have to cover business topics or business information, right, for it to be counted as a business deduction. And where is that meeting be held? But if not at your home, it has to be held in your home for this strategy to count. So what's next? So we have, I'm going to break this down quickly. And this is longer than a TikTok, 60 seconds. For those of you who know who a TikTok is, but it's, still, we're just grazing the surface of this strategy. So how do you do this? There's before, during, and after. So before the event, write this down. You need to figure out what kind of event are you going to have. So what are you doing? Is it a goal planning? Is it a networking? Is it a business planning? Is it a monthly?
How about some parties? Let's do
I'm sorry?
some like client appreciation parties once a month.
Yep, I'm gonna go there. That's a fabulous example. I have a client who's a realtor who I just spoke to yesterday. I'm doing some tax strategy work with them, and they have a barn on their property, and they've hosted weddings for friends, and they've actually rented it out in the past, and they've had, it's a really nice venue. Well, they're planning, hopefully this year, in the later part of the year when things open back up, they're hoping to have kind of a barn dance, a square dance shindig type thing. So that would be a client appreciation or networking, and hey, welcome to my home. We're having a party. COVID's over. We can all celebrate. And, by the way, I'm a realtor. Don't forget me, right? That absolutely totally legitimate. So dial in, what are you going to do as your event, right? What are you going to do? Because then that drives the next step. So 1, what are you going to do? What kind of event? Now 2, you got to do some work. You got to pick up the phone. You got to pop out some emails and say, hey, what would it cost to rent space outside of my home for a venue rental? What would it cost to hold this event if I were to go out into the world, right? And by that, I mean, don't go to the Motel 6 down the road, go class it up a little bit, right? Go to the Kempton Sawyer, ask them, like near the King's Arena. Hey, what would it cost to hold some sort of networking event at your facility for a boardroom or an executive suite or something like that, to have a meeting there for 3 to 5 people? Or what would it cost to host an event where there's maybe 20 or 30 people? Now, at the moment, we're dealing with COVID. I understand that's a struggle. So you're going to have to work with what I call the sales critters on the other end of the phone and say, hey, think abstractly with me. I'm trying to get a budget put together for later in the year when COVID, so work with the sales critters to get some answers on what would it cost to have the event at their facility. But wineries, event centers, nice hotels, that type of thing. So again, dialing in what are you going to do drives what it's going to cost, right? So you have to have clarity on what type of events you're going to have. So this isn't something you can just wake up and say, oh, I'm going to do it. It takes some planning to capture this write-off, right? So once you've gotten the quotes, and I really recommend 3 to 4 quotes is kind of your optimal, to have 3 to 4 market value quotes of what would it cost to host this event. Now you can move to the next step, which is during the event. So by during the event, I mean, you really got to have the event. You got to be able to say, here's who attended, here's what was covered, this is the topic. And I often have my clients tell me, they're like, Chris, you know what? After working with you or going through your system, I achieved tax savings, but I also achieved better business results. My business has been optimized by working with you. And I would say that's the argument. Proper tax planning really should encompass and incorporate solid business practices, right? You should be operationally better and more efficient coming out of a tax plan than you were before. Because if you're actually doing the events and getting the write-off, you should be spending that time having the meetings, having the events, having the business driven, purposeful events that you're claiming on your taxes, right? So you're legitimizing, and I say you can do anything on a tax return until you get caught, and then you have to justify it. So do it the right way, hold the events, okay? So document, what did you do? How did you do it? Who was in attendance? What was the agenda? What did we talk about? Have an agenda and document that. Have somebody taking notes, or one of your team members or yourself doing that. So then after the event, you really should be documenting the results. So if I have I'm the solopreneur, but at the same time, I do partner with people. So when I do my goal planning, I connect with people and say, hey, thank you for attending the meeting. We talked about this joint marketing venture that we're going to do this quarter coming up. And here's my takeaways, here's your takeaways. Let's follow up and make sure that we take action, because I, for one, believe our time is our most valuable commodity. And just talking about something and spending our time is pointless if we're not going to do something with it. So I keep it tight, send that email. Now I've got proof, the before the event proof of here's what it costs to host this event. I have the during the event, the agenda, the meeting, the notes. And now I have an after the event. Hey, thanks for coming to my shindig. It was great to see you there. You mentioned your friend might be listing their home. Or, hey, you mentioned you would be interested in that comp on your, what's your house worth right now? You're kind of spitballing the idea of moving out of state. I'd love to be, keep me in mind. Follow up with people about what was discussed at the event or at the meeting or at the party or whatever it is that you decide your event to be. So now you have the before the event, the during the event, and the after the event kind of documentation. So you put all that together and you say, okay, here's my comparable quotes. Here's my meeting agenda. Here's some emails that I fired off saying, hey, thanks for attending. Put all that together. And if you get questioned by the Uncle Sam, you can print it off and say, have a nice day, go pound sand. That's a legitimate deduction, right? So what now? You learn something. Anybody aware of this? Anybody learn other than John? I know John. Okay. You're the smartest person in the room. We get it. Okay. Is anybody else aware of this or know about this right off after I explained kind of the high level view? Did you learn something? Is this new?
Yes, I learned something. Thank you.
Perfect. So I can't see how many attendees we have, so I might be talking to a very small audience in the webinar. So good. So you learned something. So now what? What's probably happening is, you're thinking, okay, I learned something. So how does this apply to me, right? What can I do with this? So good. You're thinking about what does that mean? So there's tools that I have that will help people evaluate, how does this apply? What can I do? How can I optimize this? What types of events can you have? So that's where I help my clients brainstorm that. So now once you've learned something cool and you've had a chance to evaluate something cool, what do you do with it? Got to execute, got to put that knowledge into motion. So who would like an extra 10 to 12, in some cases, like my client with the barn, right? In their case, I think we can justify a $24,000 to $30,000 write-off that they get to take out of their business tax-free. Pretty powerful stuff, right? Who could use an extra 10 grand, 20 grand out of their business tax-free? Yeah. Anybody that's not raising their hand, thank you for contributing to our national debt. So, so execute. So you've learned something. Now I want you to execute. So my challenge and my takeaway, and I told John I would keep this tight at 20 minutes or less. How am I doing, John? Pretty, yeah. We both flapped our lips a little bit at the beginning. So, so I'd like to challenge you to do this. taxreductionuniversity.com/learn. Don't judge me. I just put that webpage up this morning and it's not perfect, but it's there. Done is better than perfect. You can go there and you can register for my monthly webinar series. That's free right now. I have a monthly webinar series where I do this. I teach people, and this is a very truncated, shortened version. I slow it down a little bit in my webinars, the masterclass series, and kind of give more information. So I'd invite you to register for that. It's free right now. It won't be free in about 60 days. Okay. And that's a monthly webinar where you're again learning tax. I'm dropping tax knowledge on you. January's topic was specifically about vehicle optimization. So I do my tax planning for my clients in August and September, because if we're having a conversation in December, well, one, we're crazy because we want to be spending time with family and friends during the holidays. And two, you've given yourself zero time to do anything. So let's have a tax planning conversation in August, September, rather than the end of the year when you have no time to course correct or do adjustments. So in the webinar series in January, for example, I talked about vehicle optimization, because it's pointless to talk about that in December when it's too late. You've already driven the miles during the year and you already haven't done the things that you maybe should have done to optimize your vehicle, expense, which is huge for realtors during the year. So that's the type of stuff that I drop during those webinars. So register there, taxreductionuniversity.com/learn. And then the other thing is I've given you a tax saving strategy today. This is something that, if I were to sell this course, it will be one of my 29 planned courses within Tax Reduction University. This strategy is one of those 29 tax strategies, but normally you'd be paying for this. I've given it to you for free. Now, what I'm offering you is go to my calendar, calendly.com/cut my tax bill, and let's have a cup of coffee virtually. Let's connect for 15 to 30 minutes. And you tell me what you've done with this strategy. How have you put it into motion? And let me see if I can help you get unstuck. If you're stuck in implementing this, then we've wasted our time here. So I want to help you get unstuck and get this strategy in motion for you to save money on taxes. So that's it. Any questions? John, thank you for your time here, and any questions that I can answer.
Does anybody have any? I've got a couple of thoughts that I want to add before I jump in. Does anybody have any questions that they're burning to ask Chris right now? So Chris, I know now is the time of year everybody's thinking about their taxes and, oh my gosh, how do I save money on my tax bill that I'm about to file? And I think you hit the nail on the head a few minutes ago when you talked about the fact right now it's about compliance. Like, this is the compliance time of 2020. The time to save money in taxes in 2020 was in 2020. Like, now is the time to talk about saving it for taxes in 2021. And so, yes, we have an extra month. I think it's an extra month now to get our taxes done for 2020. That just buys you time. unless I'm missing anything, Chris, if you owe money, it buys you a little bit of extra time to have to pay what you have to pay or to get the work done. But as you look at talking to realtors, my biggest question for you is you look at talking to realtors in 2020 with the way COVID changed everything that a realtor does in a lot of ways. What are the things that you're hearing realtors say, I wish I had done this different from a tax preparation, tax planning perspective, that we can't go back in time, but we certainly have 9 months and 1 day left in 2021. So what are the things that we need to be thinking about now relative to this new paradigm we're dealing with in real estate?
Yeah, great question. So one, I never hear a realtor tell me I wish I had, because honestly, they're all so busy trying to keep up at the moment that they don't have time to think about tomorrow. So, but at the end of the day, the thing I would tell people is, if you don't know your income and expenses, it's not sexy, but the straight answer is record keeping and having your books and records. Run your business like a business. A lot of realtors know, hey, I had this many transactions. They know their gross income, but they don't know what their bottom line is. They don't know what they spent to get to that gross or that net, what their net is off of that gross. There we go. I can't talk today. So, so the thing I would tell people is, if you want to keep it tight on taxes, the first step is your record keeping. So whether that's setting time aside to do your record keeping on a monthly, weekly, even daily basis, or hiring a professional is a tax write-off. I have partners that do bookkeeping. I don't want to touch that stuff. I don't do my own bookkeeping, but having somebody get that done and giving you that report so that you understand, well, here's where I'm at, here's where I'm spending, and then here's where I have wiggle room to be able to do things, right? The things that I help people do is like with the Augusta rule, we're shifting money from the business to the owner's pocket. So I first look for ways to put money not out into the world to other people. I first say, what can we do to keep the money in-house and in your pocket? So I approach my business like, my business the same way. How can I keep the money in-house and out of the Uncle Sam's pocket and in my pocket legitimately?
Love it. I think that's great, Chris. I think that the other question that I hear realtors from time to time talk about is, how important really is it for me to track my mileage? Like, I'm driving around all the time, but is that really a big deal? And what's the best practice if somebody's truly going to track their mileage?
That's a great one. How are we on time? Because I can go about 5 or 10 over if we need to.
I am good. If you guys need to bail out, go for it. But I like getting little nuggets like this and kind of getting into some of the weeds on a few things that I hear people ask questions about. So
Yeah.
I'm good. Anybody's got to go, you can bail.
So my January, I'll give you the recap of my January masterclass. The worst tax advice that I hear people give, or well, my CPA told me to buy a huge vehicle, 6,000 pounds or more, because I can depreciate the crap out of that thing and get a huge write-off. Like, yes, you can. That's true. I hear CPAs giving that advice to a mortgage broker like John, right? Who works in an office, and you were an independent contractor, right? Well, that's terrible advice. Well, first of all, John, do you need a monster 6,000 pound vehicle to do your work?
Of course I do. That's how I crush the competition. But no.
I'm not taking you through an IRS audit if I
No.
okay. For a realtor, yes, that could make sense because you need a big vehicle to drive people around. But then I say, okay, that could be a strategy that could make sense. But now you're spending a ton of money on a big vehicle and taking a monster depreciation deduction. Sure, that helps reduce your taxes now. But what about next year and the year after and the year after? Because that nice, big, huge vehicle that you bought is going to last for more than a year. And it's going to cost you more in insurance and gas. So at the end of the day, that's a Band-Aid approach, I think, to your taxes. Unless you need that monster vehicle for what you're doing, I don't view that as good tax advice. So for realtors that can apply, I hate it when CPAs or enrolled agents say, oh, buy this and you're like an office worker going to the office every day. You don't need that to do your job. So why spend that anyway? So I take a thoughtful approach to taxes and a very common sense approach at the same time. So for mileage tracking, there's an app for that. Mile IQ is phenomenal. And I firmly believe one of my favorite books is a guy named, got on my desk, Free to Focus by Michael Hyatt. He talks about automation, both process automation, technology automation, delegation automation, and self-automation. And technology automation, where you can do a personal or what did I just said it? Personal delegation or automation, where you're setting time aside to spend time tracking the technology piece of it. Set time aside to do that, and have a piece of technology that tracks your miles, right? That's easy. If you really are fundamentally opposed to, I don't want anybody tracking my miles, I don't do anything shady, so I don't care if there's an app following me around and what do I do? It's draining my battery. I'm not doing anything. I don't care. You know, my privacy, that doesn't, I don't view that as an invasion of privacy. Other people feel differently. So if you're gonna take that approach, then an alternative method is, if you don't want to track your mileage, well, you can take the approach where you track 1 week a month. Now, hear me out. What if you took your calendar and said, on a pop-up reminder, just put it on your calendar and said, I'm going to be zealously religious about tracking my miles for 1 week a month. And then you can have 12 weeks a year that you can take a sample and say, okay, here's what I drove for the year. Now, if you do that, which is an acceptable methodology with the IRS, to take a sample for your miles, you can track this. You need to track the same week every month. Now, I would not track the first week of the month, because New Year's, some 4th of July holidays that fall in the first week of the month. I would not track the 3rd and the 4th weeks of the month, because again, Memorial Day, Christmas, Easter, Thanksgiving, that type of thing. I would track the 2nd week of the month. And again, just be super zealous about tracking your miles. I see somebody saying I use TaxBot to track my miles and log my receipts. Absolutely. That's a phenomenal tool. So find a tool or find a methodology that works for you, stick with it, and make sure that you do it. But that's it. That it's not sexy. It's doing the work and putting in the time, because guess what? They wouldn't call it work if it wasn't. We all love what we do, or hopefully love what we do. But at the end of the day, it still is work. And there are things that you have to do the work to get the results.
You know, Chris, I really appreciate it. Twice in the last 10 minutes, you've mentioned not sexy. And that's why you're so good at this, because you're just not sexy, my friend, but you are super good at what you do. Chris, I really appreciate you.
Bald is beautiful, my friend.
Bald is beautiful. Absolutely. So guys, if you have questions, reach out to Chris. I trust him. He's got super, super good advice. Again, I think one of the things that we, and anybody in business, is you try and teach somebody, is you try and teach too much. And I love Chris's approach, because he just took something really, really simple and gave you an example. Remember that when you're selling yourself to your clients, that you don't have to sell everything that you do to get somebody interested. You just have to make sure they understand you're an expert at what you do. And sometimes it only takes one thing that you explain to them in detail enough that they say, wow, nobody's ever explained that to me that way. And Chris made that clear. He understands his business. He didn't have to explain everything that he does. He doesn't have to tell you every one of his strategies. Clearly, he's in business, and his goal is to generate business for himself, just like each and every one of us are in business to do that for ourselves. So if you're looking for someone to strategize with, Chris is absolutely the best out there. I really appreciate your time today, Chris. Any parting thoughts, my friend?
Thank you for your time. I know you guys are, I don't know a realtor right now that isn't just slamming stupid busy. So I appreciate you all taking the time right now to be here, as I am. But like you, I believe this is important to take time out to talk about and educate. And I just challenge you, if you've learned something today, do something, commit to doing something with what you've learned, because knowledge is not power. Knowledge applied, that is power.
Love it. Thanks, everybody. Have an amazing day. We'll talk to you all soon. Bye.
Thank you, John.